Here's my list of some of the best Vanguard index funds that you can buy this year. Nothing in this video is financial advice, by the way. I'm just trying to help you with my 20 odd years experience as an investor. Before we get started, I want you to know you can become a millionaire from index investing if you have the discipline to be a long-term investor. And I'll show you how a bit later on. At number one, we're going global with the FTSE All-World UKIT ETF, which is one of Vanguard's most popular funds for investors. As the name suggests, it has stocks inside it from all around the world. When you invest in a fund like this one, you get all the big names from the US, Europe, and here in the UK. Looking at the Vanguard website, there are more than 3,700 companies inside the fund. The ongoing charge, basically the fees, 0.22%, and it's passive like all the funds I'm talking about in this video. So it's good for investors who like a stress-free, set and forget approach to investing. This way of investing is simple, straightforward, and ideal for beginners. Going back to the fees, 0.22% is considered to be low, which is an obvious plus point. Just for comparison, if you invest in mutual funds, the fees are higher, often more than 1% higher. And when you understand compound interest, you realize that this is a big deal when you're a long-term investor. Let's say you invested £10,000 and the fees were 0.22% during the year. That's £22 that would be removed from the value of your stock. Divide that by 12 and that's less than £2 per month to buy almost the entire global stock market, or exposure to the entire global stock market, should we say. This sounds like a good deal to me personally. Before we move on, I just want to point out two options. You can go accumulate or you can go income. The difference is that the income will pay you dividends and the accumulation automatically reinvests into your fund. So you might go with income if you're in retirement, for example, but if you're trying to accumulate wealth, like me personally, you would go with accumulate. Just for clarity, the accumulation version is VWRP and the income version is VWRL. Okay, let's move on to index fund number 2, and that is the FTSE Global All Cap Index Fund, another global index fund for you to consider. But there are a few differences compared to the first one. One difference is that this one includes some smaller companies, and there are more than 7,000 stocks inside this fund, so it's more diversified than the first index fund. The ongoing charge is slightly higher at 0.23%, but this is still really low. This is another simple set and forget option that I would say is suitable for beginners looking to invest in the stock market. Now, I really like this fund because of the low costs and the fact it's globally diversified. As I said, it has more than 7,000 stocks, so you've got serious diversification. Spreading your risk and being diversified across the world is important for me, because if part of the world performs poorly, like Europe or even the US, you don't get bad returns, as other parts of the world could make up for the areas performing badly. You get a long-term growth by tracking the market on a global scale, and you've got less risk than focusing on one market in one country or even continent. Personally, I have no clue what countries or what parts of the world will do well economically or perform badly. I don't know this year, and I certainly don't know in 10 years' time. So I like to hedge my bets with a global fund. By the way, if you want to dig deeper in how exactly your fund is diversified, go to the Vanguard website and select your fund. Select portfolio data and simply scroll down to see all the data you need, like the fact that this fund has over 65% allocated to North America. If you keep scrolling down, you can even find out what companies are within your fund. And this fund has some of the big boys like Microsoft, Apple, Nvidia, Meta, and many more. So as you can see, by investing into an index fund, you can own a small slice of some huge companies. Moving on to option 3, and here we're talking about the most popular index in the world, the S&P 500. The fund is the S&P 500 UKIT ETF. This is your benchmark of the best companies in the world, headquartered in the US. This is a market that is currently very difficult to beat. If you invested £10,000 into an index fund that tracks S&P 500 20 years ago, your investment today will be worth over £60,000. And that's for a pandemic, a global financial crisis, and many more economic ups and downs. As you can see, there are over 500 stocks listed, and the ongoing charge is very low, 0.07%. Making a £10,000 investment will cost you £7 to manage. Peanuts, really, when you think about it. Or 2 Americanos at Starbucks, if that's what you're into, like me. All I would say with this fund is that you definitely want to have this year, and even over the next few years, in my opinion. But how long American companies continue to perform really well is something I'm not quite sure about. If you want to spread out your risk, for me, you go with a globally diversified index fund. Just some food for thought, and to let you know how I think about index funds. If you're getting value out of this video, by the way, all I ask is that you hit the like button. It's going to help me grow the channel and help other investors like me and you. Anyway, moving on to option 4, the FTSE Developed World UKIT ETF. This fund invests in a load of stocks around the world, but it leaves out the companies that sit in emerging markets. The fund invests in over 2,000 stocks, so another fund that is well diversified. And looking at the fees, the ongoing charge is just 0.12%. This is another passive set and forget fund that is, in my opinion, a good option for beginners. Please remember though that the info in this video is not financial advice. As I said earlier, you can go accumulation or income. And again, I'm currently opting for the accumulation option. Let's go to our next fund, and that is option number 5, the FTSE Emerging Markets IKIT ETF. Another fund with good diversification, has over 2,000 stocks inside of it, and the fees are again low with an ongoing charge of 0.22%. Just so you know, emerging markets include countries like China, India, Taiwan, Brazil, Saudi Arabia, etc., etc. When you look at the portfolio data, I probably wouldn't go all in here, as I wouldn't go all in with a UK fund or a US fund. A common theme throughout this video has been my preference for exposure to the entire global market. To do this, you could go with option 1, or you could go with a few different funds. So you might go with all the funds discussed so far in today's video. All I'm saying is that diversification is a huge part of index investing, as it spreads your risk. Okay, so last but not least is option 6, and that is the fund I currently invest into, the Life Strategy 100% Equity Fund. This tracks 10 different index funds, gives you exposure to the UK, the US, emerging markets, the developed world, just about every part of the world. The charges are low at 0.22%. When you take a closer look and you look at the portfolio data, it lists exactly where you have exposure, like US equities, UK equities, developed world equities, the S&P 500, emerging markets, etc., etc. So literally all the global exposure that I've mentioned in the previous 5 funds, you're getting in this one fund. Another big plus for me with this fund is that the sector you're most exposed to is technology. All I would say is that the future's coming, and it's coming fast. And the more exposure you get to technology companies, the better, in my humble opinion. So there you have it, the 6 best Vanguard funds for you to consider in 2024. Hopefully you've learned something from this video and you're a little bit more informed as an investor after watching this video. My main aim with this channel is to help as many investors as possible. So if you already have index funds, let me know what you invest into and why below in the comments. This is valuable info. It's going to help beginners when deciding what index funds to go with when the sales start. My personal opinion is that if you have the discipline to invest for 20 or even 30 years into an index fund, you'll become a millionaire. I've demonstrated how you can do it in a previous video. If you want to know how, see below for the link. This video will demonstrate how you can become a millionaire with one index fund. That'll do for today's video. If you've liked the video, give me a thumbs up. That would be massively appreciated. And if you really liked it, subscribe to the channel and help me get the content out there. Help me grow the channel. Anyway, thanks for listening.